Hi, welcome to the Market Alert for Thursday, the 4th of December 2014. And looking at yesterday's price action in the 5-minute chart, you can see that we're presented with a couple of losing trades within the first couple of hours. And this is simply because the market had no upward momentum at this time due to FOMC members speaking and economic news items. You can see initially that we've got support at 17,850, and as I keep saying, we're going towards the 18,000 before any correction is seen in this market. So the long side is the best side, but this action or price action for yesterday is one of just choppiness and sideways. So we see initial selling coming into the market. This is followed by buying, further buying to drive through the previous day's close, and then the market is met with some selling here in the Telegraph pole and some selling pressure contained within that as well. We then see the market sell down to the previous day's close where the market finds support. And then we get a potential buy signal, the market moves higher, and there's a clue here that there's a problem in the market. There are two, in fact. The first is that the psychological level of 17,900 is in the way, and also the volume has fallen off a cliff. So no surprise really that the market failed to move through this area here with green professional buying bars. And then we see the market come back down, and as if luck would have it, the market finds support at the previous day's close. No surprise there. See the buying coming back into the market. There's a bit of selling there, but this soon disappears as the market then trades sideways with a second buy signal there, and then the market coming down and retesting. So what's happening here is that the pros are saying, okay, look, you want to move the market lower, let's see how many people want to sell. So what they do is they test the market. You see the price is lower than the previous low here, and then in the same range as where the market was tested before. You can see prices coming off the low here with very high volume before the price bar closed. So we've got a test of the market here, and then we see the market being bought back there, and then eventually moving its way back up. And this time we see a professional buying bar going through the psychological level and resistance level to the left there. So this is what you want to see at psychological lines. You want to see professional buying going through these areas of resistance, unless of course the session is quiet and they can move through without any selling coming into the market. But on this occasion it needed some professional buying to drive through where there was some resistance to the left there. So prices move higher, and then we put in a towards the all-time high there. We've got prices driving higher, and then immediately we're hit with professional selling. This is also at 8:15 in the evening. We're now sitting at 2040, getting towards the close. We've got selling pressure in the market. It's a case of having to make a decision to take profits or not. But selling pressure, as you will have seen from the test bar videos, are a sign of potential weakness coming into the market. This is followed by a second one. So again, two things here. We've got two lots of potential weakness, plus we are 20 minutes from the close as well, or in this case, yeah, about 20 minutes from the close. So you want to consider just taking the money off the table, and especially as we've had two small losses during the earlier part of the session as well. So the market actually moving to the upside if we look at the daily chart, but a choppy way in which to do it for yesterday's session. So we can see the market there, 17,922 is the high for the all-time high at the moment, and you can see prices are attempting to move up this morning as well. So still heading for that psychological level of 18,000. That certainly needs to be breached in order to move prices higher, and it's a major psychological level. So we're not far off that at the moment. We're only 78 points off the high that we can see there with what is it, 17,922. So again, I wouldn't be surprised if this doesn't happen during today's session. In the news front, just to move prices higher, we've got official bank rate from the UK today. That's to remain unchanged. MPC statement, minimum bid rate, unemployment claims, and then we've got an ECB conference at 1:30. So I wouldn't be surprised if we don't see the market hit 18,000 pre-market because of this. And then in the afternoon, we've got Mester speaking from the OFMC board, as well as Brainard speaking at 5:30 as well. Finally, in the implied volatility, we were down yesterday 11.25. We're also down on the historical at 7.78. 5.65, as I mentioned yesterday, and 7.9 are the targets we're looking for, sort of to trigger a correction in this market. Right, well, that's it from me this morning. Let's hope today's a better day. A bit more volatility would be good, but as the implied volatility and historic volatility show us there, the market has gone fairly quiet, which is why we're getting this sort of choppy pattern at the moment. So hopefully today, with the economic news items and the interest rate decisions from the UK and Europe, should give the market a bit more impetus and momentum there. Right, that's it from me. I will speak to you in tomorrow's edition of the Market Alert. Have a good day. As ever, thank you for your support. It's very much appreciated. Do check out the test bar videos in the additional training section of the website too as well. Right, I will see you tomorrow. Thanks for watching, and as ever, see you in the next one.